Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Thursday, July 18th, 2024. Hey, how you doing? Thank you so much for coming and watching this quick video. I hope it's going to be helpful for you today and that you're going to learn something. Boy, crazy couple days in the market. We've had this big sell-off in tech and kind of surprised a lot of people, but you know, markets do go up and they do go down, so they're not always going to go up. But I hope you're staying safe out there. I hope you have a trading plan, and I hope you're following it and got those stops in place. Had a nice trade today, intraday on MO, which is Altria Group, and been showing a lot of these lately. But I really do like these type of setups. Again, this is MO on the 5 minute. And if you've been watching these videos over the last couple weeks, you've seen a lot of these. And let me bring your attention to this red box here. Well, this red box is, to me, the shortable area. Why? Well, take a look at the trend line. We draw the bottom here at this pivot, up through this pivot, and as long as we stay above this trend line, well, we're in an uptrend. But this particular bar right here broke down and broke the trend line. We also went from over 70 RSI to under 70 RSI. 70 RSI is a key overbought level. Doesn't mean if it gets to 70 you immediately start shorting, but about about 82% of the time, I believe, when you get to the 70 RSI, that's generally about it. But just because it gets up there, I'm not shorting. I have to wait for something to happen before I short. Well, again, here's this trend line, then we broke it. When you break the trend line, to me, I look at this as a market structure change from an uptrend to a possible downtrend. And one, with the break of the trend line, or two, another way to establish that you've changed market structure to the downside is if you have a high, pull back, higher high, and then you break below a previous swing low, that can also put you into a downward trend line. But that didn't happen. But what did happen was the break of the trend line. Now, when you break market structure from the upside to the downside, that's when I want to start shorting, but not right away. I want to short when it checks back. When it breaks structure to the downtrend, to the downside, very often it will have a little bit of a counter rally before you have the bigger move down. Same with breaking downtrends. If you break something, a downtrend to the downside, and it comes up, and you switch to a bullish market structure, very often, almost, very soon after you break structure to the upside, you will have a bit of a pullback before you have a longer run up. So when I break structure to the downside, I want to short the rallies. When I break structure to the upside, I want to buy the dips. So again, we have the trend line here. We broke the trend line. And what I was keying off of, and again, I'm waiting for a rally to short. What I was keying off of was this big down bar. Whenever you get a big down bar, that's telling you something. That's telling you that, I mean, this is probably a 2 ATR bar, 2 average true range. What that means is it's moved twice as much as it should. So this means something to me. When you have a big reversal bar, that means something to me. Doesn't mean I immediately short it, but I look at it, because then if we break structure to the downside like we did here, then if we get back up to that big bar, that's where I want to start placing my short. If you have a big down bar, usually when you get to halfway of that big down bar, that will act as some inherent resistance. And I see it over and over. And I've been trading for almost 29 years now. I see it over and over and over. Same if you have a big up bar. If you have a big up bar and then you get to halfway of it, a lot of times you'll rally from there. But again, trend line, we broke the trend line. I noticed the big down bar. If I get back up to that halfway of that big bar, I'm going to short. That's exactly what I did. I shorted here at 49.84. Now, I need to place, first of all, my emergency stop. I placed my emergency stop 2 ATRs above my entry. This is this red line up here, solid or thicker red line up here. 2 ATRs. If it gets there, I'm just simply out. I know how much I've lost. It shouldn't move 2 ATRs, but if it does, something's going on, so I want to get out. That's my first stop. That's the emergency stop, 2 ATRs above. Now, I also have an end of day or an end of bar stop. Well, that's going to be a closer stop. Here, this swing high here made good sense to, if we close above here, then we're probably going back into an uptrend. So 2 ATR stop above, 2 ATRs above my entry, and then my end of bar stop is simply a close above this high. It needs to be a close. Here, if it gets to the 2 ATR, I'm out no matter what. If it just touches it, it's over. But for the end of bar stop, if it closes above this high, that's my end of bar stop. About 5% of the time, I hit my emergency 2 ATR. About 95% of the time, if I have a loss, it's going to be because my end of bar stop got triggered. Okay, so my maximum allowed on this trade, maximum allowed loss on this trade is 2 ATRs. Now let's talk about profit. I want to have asymmetrical risk, meaning that if I'm right, I'm going to make more than if I lose. Okay, so if my emergency stop is 2 ATRs, then I want to place my profit target at least 4 ATRs above. I'm sorry, below in this case, because we're short. So now 4 things are going to happen. 1, I'm either going to hit my emergency stop, worst case scenario. Number 2, I'm going to have a close above my end of bar stop, going to be less of a loss than the emergency stop. That's the second option. Third option, I'm going to hit my profit target. Fourth option, the end of the day is going to come and it's going to have not triggered anything. I may have a small loss or I may have a small gain. Well, in this case today, had a really nice trade on this, and I placed my 4 ATR stop below here, and you can see I got in 49.84. It kept going up. I was like, uh-oh, just, 10, 5 or 6 or 7 more cents up here. If it closed, I got to get out for a loss. But the big bar did hold. That resistance was too much. It attempted, didn't trigger the end of bar stop, went down, and then it had its moves up and down. And then finally here in this leg, it had a nice, easy downtrend of a leg, and I did get out here at 49.34. So my emergency stop was 25 cents above. My profit target was 50 cents below. I did reach my profit target, and yeah, almost exactly 1% gain on that short. And I got out right there. And then it continued to go down. I was like, oh, well, you can't get all of it. But at the end of the day, it ended up right about where my exit was originally. So I hope this is helpful for you. It is important to swim with the current, not against the current. And if you are breaking structure to the downside, then shorting is swimming with the current. If you're breaking structure to the upside, then getting long and buying dips, you're with the current. But if you're shorting into an uptrend, you're swimming against the current. If you're trying to buy in a downtrend, you are swimming against the current. So it's important to get in sync with how the river's moving. Okay, hope that makes sense. But if you'd like to learn more about my trading, if you'd like to learn more about my strategies, I have 3 options for you. I think you'll learn a lot regardless of which one of these options. But first of all, on Saturday, I do a podcast, a weekend review podcast, where I review all the trades that I made in the previous week on the daily timeframes and the weekly timeframes. Talk about when I got in, why I got in, what was the strategy, what were the setups, what were the confluences and combinations of indicators lining up for me to take that trade. And then, of course, I talk about where my emergency stop is, my end of day stops are, how I'm going to manage the trade going forward. But that podcast is a little over an hour, and I get into a lot more of the teaching. So I hope that will be helpful for you. Option number 2, I do teach private one-on-one lessons in the evening time via Skype. I have taught students from all over the world. I love to teach. I teach a 15-hour course, 5 sessions. Each session is 3 hours. I teach you all the strategies that I use and have used over the last 29 years as a professional trader. I've turned out some really great traders. You will learn a lot from this course. You really will have a lot of tools in your tool belt to go in and trade all sorts of different markets. So if you're interested in that, if you're interested in working with me one-on-one and me teaching you everything I know, my email's in the link in the description. Just send me an email. We can get the conversation started. And then third, I do have an online course available at udemy.com. I teach you the deep dip buy stock trading strategy. It's not all the strategies I have, but it's a very good one to start with. It's very affordable. I think it's somewhere between $40 to $50. It depends on the day. Udemy, they set the pricing. I don't, but I have sold so many of those around the world. I've had such great feedback, so many good reviews, and it's a really great, affordable way to start learning a really good trading approach. 9.5 hours video, so there's a lot of content there. So anyway, I hope you enjoyed this. I hope you learned something from this. If you have any questions, please let me know. If you could hit the thumbs up button, I would really appreciate it. It really does help out the channel. Let YouTube know there's some valuable content here. And hey, if you haven't subscribed, please subscribe. I think I have 2,999 subscribers. So I'd really like to get that 3,000. I know it's not a lot compared to, a bunch of channels, but it'd be nice to get that even number. So if you haven't subscribed, I really would appreciate it. So thanks again for being here, everyone. Hope you have a really good rest of your day, and hopefully we'll talk to you tomorrow. Take care.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.